Good morning, good afternoon, good evening, and welcome to another video by the Market Maker SA. Uh, it has been a minute since we've made a video. I do apologize for not giving the people what they want, which is content, but we are back. We are back and we are recording and uploading regular than how we used to before. I hope you guys are doing good. I know it's been a minute. I missed my community. I really did miss my community, but we're back now and we're striving for more. We want a strong end to the year, especially. So yeah, without further ado, let us begin. Before we continue, of course, don't forget to like, comment, and subscribe. Don't forget to hit that notification bell icon to be notified in case we drop another video. So yeah, today we'll be doing a gold breakdown. More specifically, we'll be looking at gold from the past 2 months, and we'll be looking exactly what gold has been doing and breaking it down and looking for ways where we can take advantage of what the market is currently showing us. So without further ado, let us begin. So obviously, in terms of gold, I mean, if we're looking at 2 months ago, we're looking at 1, 2, we're looking at more or less this area, more or less, but we can't really use that area. Okay, we can, but we have to understand the history behind that area so we can identify exactly what caused the market to make these moves. So you can see what happened here. Looking from the left, we have this huge uptrend that has been happening this whole time. And excuse me for that. Basically, gold has been going from an uptrend for quite a while now. It's a bit frustrating, of course. I mean, on one side you know where the direction is going, but on another side you just want calm, and you want pattern, and you want understanding in the market, not just this chaotic movement of just one way. But regardless, though, we continue to trade. We continue to try and make as much money as possible with what the market is showing us. So in terms, as you can see right now, of the daily, we had market coming into this area of interest right here. Now, of course, what makes this area of interest very, very interesting is that, of course, we have a fair value gap. First candle, second candle right there. That fair value gap, of course, was then backed up with, of course, with market coming into this mitigation block and, of course, breaking structure at the same time while going out. And the area that was responsible for taking out this structure was indeed the fair value gap. So market came into it. Of course, now there were two ways that people were gonna see this. Of course, people were gonna try to sell going down, try to target these areas right here, but of course it wasn't gonna work, as you know, market had not given us clear break of structure. Especially, I feel like if market had first taken out this area with a very, very good impulsive move, take out this area and then come back for the second leg, then we'll be talking about something entirely different right now. But in this instance, that is not what happened. You see what market did here. The moment market went to that fair value gap, we had targets for these areas. Now, what was a bit frustrating about it, of course, that became our external liquidity, an area, of course, where we expect market to come take out due to the amount of orders that are up there on top. What made it extremely frustrating that the market took 1, 2, 3, 4 months for market to finally take out that external liquidity. So it made the trading in the markets quite tricky. Because on one side, you had people trying to sell with this first leg, second leg, of course, given confidence with this so-called supply zone, which in fact it did work. It's not really a so-called supply zone because it worked. Took out structures and people were moving, and if you're in that trade, you made money. However, if you were thinking of continuing to trade on to the downside, thinking that is a reversal pattern, you were sorely mistaken and you're gonna get taken out. Irregardless, though, market then came back slowly, taking out a bunch of people, of course, using them as liquidity, because there are a lot of people who were definitely expecting a market to come back to areas like this order block right here. They got taken out. Yeah, to this rejection block right there, they got taken out as well. And all this, of course, due to the fact that, of course, All this due to the fact that, of course, market had not shown, has not had, the only signs, the only plausible signs that market showed in terms of direction was this fair value gap right here going up. But of course, people were ignorant. People didn't really look at that. They were looking at this. They're looking at their textbook stuff instead of looking what is truly the meaning of the history behind the bear. As you can see, basically what market did, market just kept on taking out these structures. However, less focusing on that, market had been filling orders for the banks. Orders for the banks to the upside. As you can see right there, we have our daily order block right there. Rally base rally, market coming back, moving away very nicely, taking out those structures with extreme velocity, coming back and moving away very nicely. Market has been filling orders, and of course, if you were there holding for too long and had very poor trade management, you were getting taken out. So more importantly, you had to, for take profit wise, you had to target these areas that you knew where market where the liquidity was in the market. But in terms of market finally finding a rest place, this rest place was more or less here. Market found this area as a support zone. As you can see what happened, market kept on playing from the market touched there once, and market just kept on consolidating from in that area. You can see there, market giving us that very nice supply zone right there. That of course took out very significant structures. Of course, that being your mitigation block, market came back into the substructures. Of course, that being, of course, there we go right there. You have a look at right there if you're looking a bit, if you're trying to narrow it down. And of course, there were areas to trade then, the lower time frames. So market finally came into this area where of course we're expecting, because you have to remember market was showing both sides. So the people who were trying to sell this, trying to make their money back, and the right people who were trying to buy it but just needed to time it very nicely. As you can see what market did there, market came into this area. Of course, we're expecting market to come into this fair value gap, but market decided not to. Market decided to cover imbalance. You can see right there. But at the same time, the last down candle was, of course, this area right here. So then again, that was kind of significant. But anyways, market came into that supply zone, that order block, and market went away smoothly, finally taking out what that external liquidity we were looking at 4-5 months ago, which is quite crazy. But very simple. If you understand where the money is, just follow the money. Follow where you plausibly think the money is, and 9 out of 10 you will not lose. Didn't see there what market then did, dropping down to the H4 finally. Of course, now we're breaking it down further. Now we're just gonna break it down in terms of what was recently happening. As market came into this area, of course, used this huge imbalance zone as a fair value gap, which is not ideal, because usually you expect market to cover that imbalance and finally come into an area order block like that and then move away. But market decided to turn right there. It was going to be very tricky to catch because it was kind of risky. But of course, once you understood market has finally made a reversal zone, you're only going to identify that finally after this breakage of structure. So that was going to take a lot of time, because of course after that break of structure, then you weren't really expecting market to change direction, because then your next plausible area where you expect market to change direction is right here, is on this fair value gap right here, which is just above the area that we're looking at. So of course, the moment you saw market do that, you knew it was market going to the upside. You can see what market did there. Market came into this imbalance zone, or came into this mitigation block specifically. The market ran away. Using that mitigation block as a breaker block at the same time, and of course making balancing the price range, as you can see right there. And because that, we don't really take that as a fair value gap, it's very large to the point where it's considered imbalance. And then you see what market did there. Market moved away, taking out that area. The moment market took out that area, then it was a plausible sign that okay, it's time. We are definitely trading where on the upside. So where I would advise, of course, you to enter the market in this instance is, let me just fix it right there. that being artificial break of structure in terms of it taking out the zone, but also let me just do that, try to fix it there. Okay, it's fine. That being an artificial break of structure, but market then coming back to what would be a plausible area of interest, which is somewhere right there. We'll drop down to the lower time frame to see exactly what happened there. But yeah, as you can see right there, market came into that area, coming out of a fair value gap right there. As you can see, market came there, used this area support, and of course, first it wasn't gonna be quite convincing, but then one market came into this down candle order block, then that should have given you extra confidence to take this trade to the upside. And of course, if you then missed this trade on the H4, then you could have caught it right there, but that was going to be kind of tricky. But yeah, the market moved away swiftly. Of course, now we're expecting market to give us our level 1 consolidation, level 2, so expecting one more consolidation and one more push to the rise, and then we expect market to show us some form of reversal pattern. So yeah, guys, that's basically gold at the moment. I mean, in terms of the current times, it's kind of tricky to trade because all of these are in premium zones, and trying to buy from a premium zone is a bit it's too expensive, and it's risky. But in terms of you see right there, market is breaking structures. That doesn't mean anything. It doesn't mean you should enter the market. I mean, it's just very significant on how market is breaking structures. I mean, if you look down to your H3, maybe if you look down to your H3, you could have caught something. It was gonna be tricky. Could have caught something. There we go, right there. Break of structure. Before that break of structure, to try catch it, of course, this was the only break of structure you had, and basically you had a rally based drop. Market not even coming back to fill significant supply zone. Market just came into that area and finally ran away. So it was tricky. The only way you're probably gonna catch it is after the mitigation block, market coming back to that area and dropping, which could have landed you a lot of money, but then again, it's how it is. H5, see, same thing. So yeah. So in terms of gold, we're expecting for one more level to the rise. In terms of where we might catch it, that is a very good question, because in terms of supply zone wise, the only plausible supply zone we can see from far away at this moment is right here on the daily, which that is going to be quite tricky to reach. And knowing gold very well, gold can just take off from here. Can just use this area right here, use this fair value gap right here, and just take off from there. So it'll be quite interesting. Definitely know that we're expecting one more level to the rise in gold, and yeah, that is really it, guys. That is the gold breakdown. Don't forget to like, comment, and subscribe. Hit the notification bell icon, and don't forget to check out our other videos on how we trade and execute in the market using our patent strategy. So yeah, guys, thank you guys for watching, and goodbye.